Hello students, I am Dr. Jadhav, Assistant Professor, PG, Faculty of Commerce, People's College, Nanded. Today I am taking a lecture on subject Advanced Accounting Second, topic Departmental Accounting. This is the sixth question of this topic. This question has asked in the examination May-June 2022. The following is the trial balance of Mr. Aditya for the year ended 31st March 2021. Trial balance capital on 1st April 2020 rupees 1 lakh. Draw- Drawing during the year 20,000 under the heading of opening stock. Software 90,000, hardware 42,000. Under the heading of purchases, software 4,50,000, hardware 2,30,000. Under the heading of sales, software 5,88,000, hardware 2,92,000. Salaries 25,200, advertisement 17,800, rent 6,400, commission 21,200, miscellaneous expenses 10,000, computer 24,800, sundry debtors 33,600, 4% IDBI bonds 20,000, sundry creditors 17,600, interest on IDBI bond credit side 800, provision for bad debts 1,600, cash and bank balance 9,000. Total of the trial balance is rupees 10 lakh. Adjustment number one, departmental trading and sorry, prepare departmental trading and profit and loss account for the year ended 31st March 2021 and balance sheet as on that date after the considering the following adjustment. Adjustment number one, stock on 31st March stock on 31st March 2021 was software 60,000, hardware 48,000. Adjustment number two, an amount of rupees 2,400 from out of sundry debtors has to be written off as bad and provision for doubtful debts is to be increased thereafter 10% of the debts outstanding. Adjustment number third, the following expenses are outstanding as 31st March 2021. Advertisement to rupees 2,600, salary rupees 2,400, commission rupees 3,400. Adjustment number 4. Provide 10% depreciation on computer which is equally allocated. Adjustment number 5. Other items to be allocated in the ratio of 2:1 as between software and hardware. Now I am taking solution of this question. In that question, three formats should be necessary. Number 1, trading and departmental trading and profit and loss account. In that format, 8 column, particular software rupees, hardware rupees, total rupees, debit side, same as credit side. And number second, general profit and loss account, particular rupees, debit side, credit side. And number third, balance sheet as on 31st March 2021. Liabilities, asset rupees. Now we are solving answers. Capital on 1st April 2020, rupees 1 lakh. Capital goes to the balance sheet, liability side, inner column, rupees 1 lakh. Second item, drawing during the year 20,000. Drawing less from capital, balance sheet, liability side. Next item, stock on 1st April 2020. It means this is the opening stock under this heading. Software rupees 90,000, hardware rupees 42,000. Opening stock effect goes to the departmental trading account debit side 90,000, 42,000 goes to the debit side of trading account. In that column, hardware 42,000, total 1,32,000. Purchases. Purchases also goes to the departmental trading account debit side. Software rupees 4,50,000. Hardware rupees 2,30,000. Total of this 6,80,000. Next item, sales. Software 5,88,000 goes to the trading account credit side under the column. Software 5,88,000. Hardware 2,30,000. Sorry, sales amount 2,92,000. Trading account credit side. Total of this 8,80,000. Next item, salary. Salary goes to the profit and loss account debit side inner column because of adjustment on that item. Adjustment number 3, outstanding salary. Hence, amount should be in inner column. Salary rupees 25,200. Next, advertisement 17,800. On that advertisement also adjustment outstanding. Hence, 17,800 inner column. Next, rent rupees 6,400. 6,400 goes to the profit and loss account debit side total column. Next, commission 21,200 goes to the profit and loss account debit side total column. Miscellaneous expenses 10,000. If it goes to the profit and loss account debit side total column. Sorry, in that commission adjustment, adjustment number third, outstanding commission 3,400. Hence, commission 10,000, 21,200 is inner column. Commission 21,200. Computer is an fixed asset, goes to the asset side, balance sheet asset side, inner column because of adjustment on this item. 24,800 due to adjustment effect inner column. Sundry debtors 33,600 adjustment on also sundry debtors. Hence, if it goes to the balance sheet asset side inner column, sundry debtors 33,600. %, IDBI bonds rupees 20,000. Effect goes to the balance sheet asset side. Sundry creditors 17,600. Effect goes to the balance sheet liability side. Interest on IDBI bonds 800. Effect goes to the general profit and loss account credit side. Provision for bad debts 1600. Effect goes to the general profit and loss account credit side. Cash and bank balance 9,000. Effect goes to the balance sheet asset side. This is the distribution of trial balance. Now I am taking adjustment one by one. Adjustment number one. Stock on 31st March 2021. Software 60,000. Hardware 48,000. It means this is the closing stock. Effect goes to the trading account credit side and balance sheet asset side. Trading account credit side and balance sheet asset side. Adjustment number two. An amount of rupees 2,400 from out of sundry debtors has to be written off as a bad. It means this is 2,400 is the bad debts deduct from sundry debtors, and provision for doubtful debts is to be increased thereafter 10% of the debts outstanding. It means after deduction of 2,400 remaining balance on the sundry debtors, calculate 10% RDD and deduct this from debtors, and second effect goes to the general profit and loss account debit side. Bad debts 2,480, 33,000 minus 600, 33,600 minus 2,400, remaining balance is the 31,200 less 10% RDD, that is 3,120, remaining balance is 2,000, sorry, 28,080. Effect goes to the profit and loss account debit side. Bad debts 2,400, 2,480, 2,400, sorry, 2,400 is the bad debts. Bad debts 2,400. And second effect of RDD, general profit and loss account debit side 3,120. Adjustment number third. The following expenses are outstanding as on 31st March 2021. Advertisement 2,600, salary 2,400, commission 3,400. First effect, balance sheet liability side under the heading of outstanding expenses. Second effect, add in concern related item. 2,600 is the advertisement. Add in advertisement 2,600. 17,800 plus 2,600, 20,400 total advertisement. Next item, 2,400 salary, outstanding salary, add in salary 2,400, 25,200 plus 2,400, 27,600. Third item, commission 3,400, add in commission 3,400, 21,200 plus 3,400, 24,600. Now adjustment number 4. Provide 10% depreciation on computer which is equally allocated. 10% depreciation calculate on the computer balance sheet asset side 2,480, 24,800 minus 2,480 equal to 22,320. Second effect goes to the profit and loss account debit side, depreciation 2,400, 2,480, equal distribution in the ratio 1:1, that is 1,240, 1,240, same as both department. Adjustment number 5. Other items to be allocated in the ratio 2:1 as between software and hardware. All items means which is earlier I have taken and not distributed. All items. Which items remain salary? Hence distribute in the ratio 2:1. Total salary 27,600. Distribute in the ratio 2:1. 18,400 for software, 27,600 minus 18,400, remaining balance is 9,200. Same advertisement also 20,400, distribute in the ratio 2:1. 13,600, 20,400 minus 13,600 equal to 6,800. There is no need to calculate again for the Department of Hardware. Rent also distribute in the same ratio. The amount is given by software 4,266. It means take round up 4,267. 6,400 minus 4,267 is 2,133. Then commission also distribute in the 2:1. 16,400, 24,600 minus 16,400 equal to 8,200. Miscellaneous expenses also distributed in the ratio 6,666.66 means round up 6,667. 10,000 minus 6,667 equal to 3,333. Bad debts also same. Bad debts is calculated here 2,400. Distributed in the ratio 2 is to 3. Sorry, 2 is to 1. 1,600 and 2,400 minus 1,600 equal to 800. All adjustment has done and solved. Now close one by one account. First close trading account. Trading account credit side department software total 6,48,000. Hardware total 3,40,000. This total is more than debit side, and it means debit side less from credit side. 6,48,000 minus 5,40,000. 1,08,000 is the gross profit of department software. 3,40,000 minus 2,72,000. 68,000 is the gross profit of department hardware. Total gross profit is 1,76,000. Transfer to profit and loss account credit side. Then close profit and loss account. Profit and loss account credit side total is 1,08,000. Department software, department hardware 68,000, and total of the total column is 1,76,000. Is more than debit side. It means in the in that profit and loss account there is net profit. 1,08,000 minus 62,174. Net profit of the department software is 45,826. Then calculate department hardware 68,000 minus 31,706. 36,294 is the net profit of department hardware. Total net profit is 82,120. This net profit transferred to general profit and loss account. Hardware 45,826. Software 36,294. Now I am closing general profit and loss account. General profit and loss account credit side is more than debit side. Credit side total is 84,520. Credit side minus debit side 84,520 minus 3,120. 81,400 is the average net profit that is transferred to balance sheet Liability side, add in capital. Average net profit is 1,81,400. Sorry, 118,000, 81,400. Average net profit is 81,400. 1 lakh plus 81,400 is means 1 lakh 81,400. Then less drawing 20,000. 1 lakh 61,400. Then close balance sheet. Balance sheet is tallied with 1 lakh 87,400. This is the solution of this question. I hope you understood this solution. If you have any doubt regarding this question, you can comment on the YouTube. I will give you reply. Gross profit 1,08,000, 68,000. Net profit 45,826, 36,294. Balance sheet carried 1,87,400. Thank you.